After some pretty bad job openings numbers, the market seemed to have a bit of a rebound in it. Let's talk about what is going on. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our Elite webinar. Now, if we haven't met before, my name is Chris. I'm part of Riz International, and we are a group of traders who are looking to better our skills in the market to help achieve financial freedom. And if you're watching this on YouTube, do me a favor, make sure you smash that like and subscribe button, click the bell icon next to it so you get notified every time we upload a new webinar here on the channel, because we want to make sure that you have the most up-to-date market information possible. Now, the man himself, Riz, is not joining me tonight. He has things going on, but we forge on without him. So after we closed up last week, let's look here at the S&P 500, right? So, we kind of had a huge bearish day on Thursday. Friday was kind of wishy-washy, and we were going into the job openings and jobless claims this week. That was kind of the big catalyst, and we had the biggest 3-month drop in U.S. job openings since the pandemic started. Uh-oh, I said the big P word. I guess big G is going to censor us for saying that. But in any case, the market seemed to, kind of think that that was okay. We had a nice green day on Tuesday, and part of that stems from the fact that Riz has been saying this all along, right? Raising interest rates, they are looking to cool the economy off. They want to increase joblessness, if that makes sense. They want the economy to be creating less jobs. Again, this makes absolutely no sense to me, but that's what they want, and they say that's good for the economy, right? So even though it's bad news, the market viewed it as good news, because if this is the case, and this is what the market is thinking, that if these rate hikes are starting to work, it may mean that we might be in the running for a rate cut before the end of the year. I'm sorry, I am throwing the BS flag on this. I'm just going to put it straight out there. That is a load of malarkey, okay? The Fed has said that they are not going to cut interest rates this year, that we may not see an interest rate cut until next year, but pretty much the market doesn't believe Powell at this point. That's really what it comes down to. I, for one, kind of going to take the Fed at their word on this one, because this has been their big thing that they're trying to do, right? They want to cut inflation before the next election cycle, which is coming up next year. And the last thing that they want to do is cut rates and get inflation spiking back up. The CPI numbers were looking better, in as far as things are concerned, compared to what they were before when inflation was higher. And, the market is viewing these, this increased job openings, and, the job reports, and they're saying, okay, good. What the Fed is doing is working. That means we might have rate cuts soon. I don't know where they get off or what they're smoking, but man, I sure wish they would send some to me, because that's got to be some good stuff if you're thinking like that, because that is just not going to happen. I'm going to say, I'll put it on record right here. If I'm wrong, feel free to tell me I'm wrong. When we get to the end of the year and we had rate cuts, Chris, and you were wrong. I'm saying there will be no rate cuts until 2024 at the absolute earliest, maybe even 2025. That's kind of where I'm at with this. I hate it, because I would love to be able to move the house that I'm in right now and get a nicer property, but there's absolutely no way I can afford another mortgage right now, because interest rates are just ridiculous. And I absolutely agree with you, Jeff. He says that, inflation feels a bit sticky. Yeah, you're not wrong, especially with oil pushing a bit. And yeah, we'll look at that here in a second. But, we had this big push going into Friday, but man, it's a good thing I left this line on the chart, isn't it? Because that is just acting as resistance right there. That is a beautiful technical rejection of that, resistance line up there at the top of the channel that we were in for so long. So, man, I look really smart leaving that on there, don't I? This is a good reason not to switch to Riz's charts, because it wouldn't have my cool drawings on it. But yeah, we really just kind of came back up here. Huge push on Tuesday. Wednesday was a slightly green day, and Friday was an absolute crazy day, for lack of a better term, though we did, basically close slightly up on the day compared to the previous day's close, but still a red day, but a nice technical rejection at the top of the channel here. We'll see on Monday if, this continues, but we do have some support here right around 4,500. That has been just like the bane of our existence for the last couple of weeks, has been a really huge area of support and resistance for the S&P 500. And we're going to see what happens on Monday, or excuse me, no, we won't, because the markets are closed on Monday because it's a holiday here in the United States. So let me rephrase that. We'll see what's happening on Tuesday. I can't wait to see the YouTube comments on that. I'm sure you've already commented, but hey, I caught it in time. But yeah, really, that was the big catalyst this week, was the job openings. And yeah, it was pretty bad, as far as things are concerned. But the market's like, yeah, less jobs. That's good. Let's buy. This is the world we live in, guys. It's absolutely nuts. Let's take a look here at the breakdown for the S&P 500. And if you guys have questions for all of our elite members here live, go ahead and start posting them now so we can just jump into that when we get to the end of our normal content. We're seeing a big run up here in tech, over the last couple of weeks here. Big moves there. Communication, a little flat this week, nothing too exciting. Consumer discretionary, again, about the same, kind of holding. And, we look here at the S&P 500 and or this rather represented by the SPY ETF, and we're really just kind of holding steady. And that's kind of what you saw. We kind of ran right up the top of that channel, and we just kind of were holding there. But energy getting a big jump here, as Jeff alluded to earlier. Oil prices, we'll talk about that in a minute. Utilities still is languishing well below 10%, negative 11% right now. And everything else is just kind of really hovering around the zero line. Financials, real estate, healthcare, and consumer staples, all really just kind of hanging around zero or, one, plus or minus 1 or 2%, basically, is really where it comes down to. So really the big winner here this week was energy. And as we talked about, that is because oil is starting to dig up here, getting a really nice push, running right into our resistance line here, right around 85.50 or so. Let's see, we closed at 85.55 on Friday. So it'll be interesting to see what happens with that on Tuesday when the market comes back open. But obviously we are getting that push here. If I'm not mistaken, Russia said they were going to institute some cuts, but you're like, but Chris, we've boycotted Russia, right? There's sanctions, and yeah, it's called OPEC Plus for a reason. That plus is Russia in it. So definitely getting some cuts there. I don't know if that's really the reason for this run up here. Of course, there's been a lot of things going on overseas, in Eastern Europe and the Gulf. Things are heating up with Iran. There are obviously lots of things going on in Africa right now that are kind of nasty. And so a lot of different things can be pushing on oil here as we go into a short trading week. Gold, again, getting this nice little bounce. We talked about this last week. Nothing really too exciting here. After this sell-off, we should get some rebound, and we're just kind of close the week a little flat on gold, right around $19.40 an ounce. So, definitely a lot going on there. Let me move that. Let's jump over here to the bond yields real quick. And if you haven't been with me before when Riz isn't on a webinar, trust me, I value your time. So we're going to get through this. We love Riz, but sometimes he is a little long-winded. But you know what? He gives you the deep analysis. I give it to you fast and dirty because I know you got better things to do on the weekend. After pushing here to an all-time high entry since the early 2000s here on the 2-year bond yields, we did have a little bit of a pullback, which wasn't too surprising after this big push up into the 5% area. Looks like we closed at 4.88% for bond yields here on the 2-year, and we did see a nice little uptick here in the 30 and the 10-year yields going into Friday. So, definitely a little bit of move up there. Dollar is pretty well holding steady. We had some up, we had some down, and then we're back up again. Nothing too exciting, but definitely, more of a push into the dollar right now. Again, with things heating up in Eastern Europe, I'm not surprised that we're seeing this because we're seeing more of a polarized world as far as that's concerned. So we'll have to see how this trend continues going into the next few months. Now let's take a look at the big dates this week, and there aren't any. No big economic catalyst this week, guys, to keep an eye on. ISM services, PMI, no one cares about that. So no major events that you need to keep an eye on that should push the market, but that doesn't mean that there aren't other things that could happen that are just outside our radar and we have no idea that they're going to happen. A news catalyst can happen at any time. You just never know what this current news cycle is going to do or which, Fed chair is going to talk, and, then the market moves the way that it does. But we are going into a short trading week. So typically what we do see on those is a little more subdued price action. Typically doesn't mean there's a guarantee that it's going to happen. Something crazy could happen over the long weekend and the markets go nuts on Tuesday. So definitely something to be aware of. Of course, no trading on Monday here in the U.S. markets, but Jeff says he's looking at ORI as a longer-term hold dividend stock. All right, let's take a look here. ORI, Old Republic International Corporation, looking at a long entry around 26.50 if it gets there. Yeah, I see where you're going with this, Jeff, and I like it. Let's see, what's the dividend on this sucker? Yeah, it's not too bad for a low dollar stock. That's a pretty high dividend, honestly. But yeah, I mean, if it dips down here to 26.50 and it can hold that area, especially with the what is that, the 50? Yeah, I can't remember my moving averages. Yeah, with the 50 kind of rolling up here with this nice big push into earnings, and a bit of a, I'd say a bit of a pullback and a consolidation so far. I could definitely see an entry around 26.50. If we get another little dip here and it kind of holds that 26.50 area, that'd be a great jump in place, in my opinion. And a really nice earner, as far as dividends are concerned. Let's see, how's that hold? Yeah, so they're very solid. Okay, so yeah, the last, right around that 24.50, 23. Ooh, that was a good. Yeah, right around 20 cents, 23, 24 cents. So, honestly, like I said, with a low dollar stock, that's a pretty high dividend, to be honest with you. Earnings seem to be really good for this. Looks like they missed on revs just a little bit. Yeah, they seem to like to miss revenue. Here's a revenue beat by quite a bit, I might add. So yeah, I mean, this seems pretty good. From a quick dirty look at the fundamentals and the technicals. I agree. Buying up here is a bit of a chase. And let's look out big picture here, right? Because we're talking long-term hold. So I would say that, this one doesn't, I mean, it moves, but it's not a huge mover. And somebody's going to be like, but Chris, it went from 11 to 27. That's almost, a 2.5 times increase. Yeah, I did math on stream. I did a good job. Yeah, it is, if you can get it down there. But I mean, as far as like the overall trend is concerned, it moves fairly slow. It's not a huge mover like Tesla or something like that. So yeah, I can get behind this. It seems like we came out of the doldrums here back in 2012. That's a long way back. But let's get back in here a bit closer to get more recent price action, get a better idea on that. There we go. So yeah, I can get behind that, Jeff. I like it, especially with the dividend. That's solid. That's a solid entry and a good long-term hold. And if it can continue to, kind of melt upwards, for lack of a better term, just continually grind up, could definitely give you some solid returns long-term. Like you said, for a long-term hold, it could definitely do some work for you. So I don't mind it at all. I think 26.50 is a very reasonable entry and, definitely gives you a lot of upward room, especially with this nice jump here on earnings or post earnings, excuse me. That looks like a news catalyst, if you ask me. There was probably something going on there that day that pushed them into that overbought territory. But no, I like it. That's a cool one. I'll have to put this on my watch list to keep an eye on it. Not one that I'm too familiar with, but definitely looks like a financial if I had to guess. Let's see here. Yeah, it's a holding company. Okay, business and insurance, or insurance underwriting. So it's an insurance company. Cool. Yeah, I mean, I typically don't play insurance companies all that often, but this one seems pretty solid. So I like it, bro. I would go for it. If it gets there, go for it, my man. I think it definitely could be a good long-term hold for you. Hey, not a problem. It's always a pleasure to help you guys out. Let me see here. I'm not seeing any other questions coming in at the moment, but I'll give it a second. I don't want to cut anybody off if they're still typing or if they have something else going on. But yeah, the whole thing with the inflation, let's jump back to that. It really does feel kind of sticky. That's a really good way to put it. It's like they say that inflation's going down, but I'm not seeing too much reduction in prices as far as things are concerned. Now, people would be like, oh, but car prices have gone down. Okay, great. How often do you buy a car? Let's be honest, for most of us, it's kind of a fairly long-term investment. We'll put it that way, unless you flip cars or something like that for a living, which I thought about doing at one time, but never just got into it. I don't know enough about cars, and I understood that when I started looking into it. For most people, things like that really aren't going to be, you're not going to see that change in inflation. What you want to see the change in inflation on is food prices, because food prices are just nuts right now. Price at the pump. Obviously, gas is jumping up. as we saw, no, wrong slide. There we go. This nice big run up here this week, very bullish move here on oil. We'll have to see if that continues. Obviously, we're seeing that reflected in the pump. I'm seeing it for sure. I know prices have jumped here quite a bit on gas. We're getting closer and closer to that $4 mark, which is nasty. I don't like seeing that. But it's one of those things where I think the current administration has been releasing a lot of the strategic oil reserve to try and keep the price of gas down, which does definitely affect the CPI numbers. And there's only so much longer that they can do that. So that's something that we definitely need to keep our eye on. Of course, if things get hot in Eastern Europe, as they already are getting hot in Eastern Europe, but if they get more hot, that's definitely something that will affect the market. Definitely the price of oil, things like that, and inflation as well. So there are a lot of outside factors is really what I'm trying to say. Obviously, things seem to have calmed down a little bit in the South China Sea and the Taiwan Straits, but there's still plenty of brinkmanship and saber rattling going on out there. We just don't hear about it as much because of everything that's going on in Europe right now. So definitely keep your eyes on that here. If you want to keep an eye on something, that's definitely a big market catalyst if things get hotter over there and pieces start to move around the board more obviously, and we hear about it. Definitely something that can move the market. And yeah, I would just say keep at it. Enjoy this long weekend. If you're here in the United States, obviously most of you will have Monday off. If you're kind of a freelancer like myself or have other and more important jobs, you may not have Monday off. If that's the case, enjoy the day off from the market. Just relax. Spend time with your family if you can. Enjoy the weather before it starts getting cold. And I'm going to say the F word, guys, before we get into fall. Unbeknownst to Riz, fall is one of my favorite times of year, especially here where I live in Indiana. So, guys, go out, enjoy your weekend. Have a great time. Thank you for joining me with me for our shorter than normal webinar. But honestly, I like it this way because I want to get the information to you quick, and I know you have better and cooler things to do. So everybody have a wonderful rest of your weekend, and we will see you in the market on Tuesday, not Monday.